Greetings, traders. This is Heezy F Baby, aka Huzefa, aka whatever you want to call me, from Trading on the Block, aka Traderondablock on Twitter. Thank you for watching. Today, I'm going to be cutting straight to the chase, pretty much, and going through Ethereum. There's a lot of, I guess, FUD going around about Ethereum, and it's not unfounded. And the price action obviously tells a different story about it not wanting to go up and why it should be going down. And I do think it will go down, but I think, in my opinion, there's a long-term play with the Ethereum here. It's too big of a project to fail, and it is one of the largest assets in the world right now. So you can't sleep on this. And then we're also going to be going through, what happened in the past and how market structure repeats itself. But we're going to start first with what's going on with all of the things that are happening in the world. First of all, why are there people that are skeptical about Ethereum? Okay, there are a few reasons. Number one, Cardano. And this is Trader on the Block, by the way. Follow me on Trader. Cardano, they're coming up as the Ethereum killer. What they're saying is that they have 500 times cheaper fees and they present higher volume than Ethereum. So the amount that they spent on a larger amount of transaction was less than 50%. But the problem is Ethereum advocates now are saying, okay, if this goes away and we can't make money on Ethereum, then what's the point of Ethereum? So that's where the FUD comes in. What if the miners kind of leave? But here's the thing. There's an upgrade coming to Ethereum, and we're going to talk about that in a bit, actually. But there are advocates of Ethereum that feel Ethereum is actually going to go up significantly. And in this article, for example, Bitcoin and Ethereum was actually going to pull back a lot stronger in the long run than the other altcoins. I don't necessarily agree. I definitely am a believer of Dogecoin, and you already know that by my tweets. But that's pretty much the only meme coin I am involved with. But that's only because Dogecoin is going to go down as the original meme coin. And it's garnered a lot of attention as being employed by Tesla. So I believe they're going to build a utility out of it. I got lucky just investing in it years ago. So I had no idea. I just threw a little bit of money in there, and I lucked out. So Dogecoin, I've always been a believer, but this analyst believes that the other meme coins with no utility are pretty much stupid. They are billion-dollar valuations for no reason. This person here, this analyst, saying that the markets will pull back. We finally get a 10%, maybe 20% correction on the stock market. So stock market is very dependent on the price movements that you see in crypto. You can read this article here. You can go on my Twitter. You can see where this article is. But Bitcoin and Ethereum will pull back stronger, is what they're saying here. So there's, as you can see, back and forth. People don't know where it's coming, what's going to happen with the Ethereum. 50% of global financial transactions might involve Ethereum in 10 days. So 10 years, sorry. And hedge fund manager says, so that's a big news for Ethereum. Like, if hedge funds are investing in Ethereum, that means that the Ethereum that they envision in 10 years is not the Ethereum that you see today. And I believe that very, very true. I'm not a huge Ethereum guy. I have Ethereum in my portfolio, but I'm not a huge buyer of Ethereum. I don't have any buy orders right now. The last buy order I had was at $4,100 CAD, so Canadian dollars, which is approximately $3,000 US, something like that. So that's actually about $3,200 US. But yeah, that's about it. But these articles actually implore me to look into Ethereum more so I can possibly invest in it in the future. So from a fundamental perspective, it's kind of back and forth, but I'm seeing a majority of it is actually positive news for Ethereum. So in terms of in terms of on-chain analytics, of course, that we can get into in my Twitter feed, and I might do videos about that in the future, as I am still learning about on-chain analytics. So that will go through, and I'll have a little more deeper knowledge about what's going on live in these markets. But for now, let's go through some of the technicals and the historical charts and patterns that we've had. So first of all, we're looking at so far a 53% drop. So let's look at that and keep that on the chart right now. Over the point of 73 days, Ethereum has dropped 53.57%. So that's important to note. All right. And what's also important to know is the last time that happened. And in this case, 63% dropped. And the last low of that move it also took 73 days. So at this point, during the last season of, we'll call it its bear market and bear market, also took 73 days. Okay. So at this point, if you put this in here, this would be moving up, like not even retracing back down. Okay. So that's technically what would happen tomorrow. Okay, so that's an interesting thought. I don't think that's going to happen here. Number one, because see, when this move came down, it initially came down once, and then came down again, and then came down again. So it retraced 3 times. Here we don't even have, we have maybe, if this is the end of this, then it's probably going to retrace one more time, and if not, it's going to be a large wick or something that indicates that that's the ending move. There's too much support here, too many buyers here, and this is going to move up. Okay, so I would not buy here. All right, so all you people that are buying DCA and stuff, that's great. You can keep buying, but technically you're putting on a risk on yourself because of the fact that anything in the world can go to zero. All right, so what I do is I look at where I could buy again, and I'll show you what I mean by going back into time. Now this chart here goes back all the way pretty much to its inception. Not really, but yeah, pretty close. I think it's the closest you can go. So 2015. Now what I would do is I would first look at market structure and see, okay, it's gone up. There's this big correction here, big rally up here in 2016, and it dropped 67%, and then it ranged. Okay, so and then it ranged until it broke out right here. Okay, so we're just going to draw a line here. It broke out right here. Look at the market structure when it broke out. All right, now now this is obviously way too early. There weren't people that were actually actively, you know, like buying Ethereum like they're buying it right now. But if we were in this market situation, where would people be looking to buy? Right, people, DCAers would be buying right here. Right, yeah, obviously it went up, thank God. But then what if this went down all the way and went to zero, and it's only at 6 hours? So DCA always doesn't work that way. What I would do, and this is not financial advice, but this is what I do, and that is I wait for market conditions to look very bullish, so bullish candles, large wicks to the downside. So that means that there's a lot more support now, a lot more buyers. These wicks indicate buyers. This is a fake out. This is when institutional investors come in and buy this thing up. They put sell contracts so that they can get into position, and then they sell it off, and then they buy heavily, and then they take out all the stop loss orders of people that are shorting this. So this is marketed right here. This is that market manipulation. This is technically the true area here of support, right in this section. But anyways, that's a little too much maybe for now, but the gist of it is wait for a pullback and a hit of support, and then you start buying. But this is just an example. Obviously hindsight is 2020, so we're gonna just continue and show that, okay, then it's a range period and then it pops off. This is the move that people are looking for right here. Okay, this is that move. We're in this still right here. Okay, this is that move people are waiting for. Why are you buying all the way here? Okay, now, yeah, sometimes this will occur and then the market will shoot up automatically without a huge range period. But let's go through this and see how many times that actually happens. So now it shoots up, it continues shooting up. All right, what I'm doing is I'm BCAing in. So I'm seeing how far my price is away from the EMA. Now I see resistance because I know as an investor that market goes up and it always retraces down. And when you retrace, you want to usually buy. At that time, this is what you're looking for in a breakout. Now, obviously, no one's going to call that. Like, I can't say, oh, I would have bought here. Like, you know, well, if it was me and I saw this, what I would do is I would zoom out. I would see that it's hitting a large resistance. No way in hell I would ever consider buying anything here. Anything here, none of this. This is when I would start considering buying. Okay, this is when I would see that this is broken all-time highs, presenting me huge bullish candles. It's time for the buyers to take profit, not all of them, some of them. And now, based on the measured move, I would use my Fibonacci and say, okay, where could be a good place to potentially buy? I'll put a buy order here, for example, and a buy order here if I feel that this is continuing to go up, and then see what happens. If I don't make that move and buy, I don't get into the trade. But I'm going to assume I wouldn't even enter in this trade. Okay, now that's how you got to look at it. If you don't enter into a trade, you forget about it. You know why? Because watch what happens. It's going to keep going up. Bow out. This is what you see. Now let's measure that move again. Okay, that's 70%. Let's just keep going here. All right, so that's just 70%. All right, let's use this. It took 36 days for that 70%. This is potentially a good place to buy when it hits that EMA. All right, and yeah, it'll go down, it'll go up, it'll go down, but this is a potentially good place to buy if you are bullish. If you are bullish, okay, and then you can take your first profit target. So now this is ranging. So see that 70% range, and you wait for the breakout before you buy again, and boom, You wait for things like this. Larger and larger bull candles, larger and larger bull candles. And then here's a lot of area. This huge area here is a big area where there's a lot of resistance. So if this breaks and presents a nice close over well above that area, and then it starts seeing these wicks, this is a good area to enter. Now if you miss that, there might be more opportunities like this, but it doesn't mean that's always the case, by the way. So don't always feel that that's going to happen. You see it now, another breakout, all these huge bullish candles, blah blah blah. So this is in the early days of Ethereum. And then what happens? It goes up, makes its move. This measured move was how much? 248%. Okay, and then boom, back down to the EMA. How much is this move down? 61%. Now you can be a trader where you're actually buying in every 70% correction, right? Because you feel like you're getting at a discount. Okay, now at some point, I don't know when exactly, but there's a big Ethereum move downwards, about 90% drawdown in Ethereum's value at some point. I don't know when it is, but we'll watch out for it. So this move right here went from here down to here, lasted 79 days, draw down 77%. I don't know whether this is the lowest yet. Maybe it went down lower, and it did. Okay, so see, you're not entering into these trades until you have a buy indication. Buy indication means and if you should know this, I think, depending on how, if you have lower highs, okay, this is a lower high, this is a lower high, okay, and this is breaking out. This doesn't always happen right here where it breaks out and touches this, but a lower high always happens. That's how the market moves. Now, if you get a lower high like this, you went up here, okay, up here, and then you got a lower high and down. Okay, that's your first indication that this thing is gonna start going down a little bit. Retracing, you don't know how much. In this case, it retraced 70%. Okay, but at this time, you don't know whether it's going to go down more. All right, so now you're not doing anything. Okay, you're waiting for a range to be established. If a clear range to me is not established, I don't even trade, depending on, of course, on microdynamics. So now this thing is ranging. To me, this looks like I'm not doing anything at this point. I'm trying to look for, where is this thing going to bounce off from? Here and here, or here? Where is it going to bounce off from? Okay, because what I'm looking for is for it to establish a range so that it can go like that. And once it closes nicely above that range and it retraces down to an acceptable area where I would feel like I could buy, that's when I would buy. I would not buy anywhere here. All right, now if this market structure never occurs, I don't play into it. I take it off the table. Okay, the amount of money that you could lose just getting into a trade, even if your rules don't align, is much greater than how much you stand to not win. Okay, so keep that in mind. So in this case, look how much, if you had not waited, if you had bought it right here because you thought, okay, this is support, came back, it's going to test the support, I'm going to buy it because this is the cheapest price, then how much more are you standing to lose? DCAing, number one, you bought it here, 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 here. It's already set $800 here, but now the price is already at $200. Are you gonna take a loss? Just keep on going down. See, I think this is when the Ethereum price went down like 90%. Yeah, there it is. So this correction took how long so far? And this is not even probably the bottom. 95% drawdown in a year, over a year. Okay. Now, what's it doing? Now it's establishing a range. Okay. So now I see this is the bottom. Okay. I'm not going to do anything here still. See, these are all higher highs, but I'm still not doing anything here because it's dropped so much. It has to establish a specific range that it can break out from. So I would say at this point, this is starting to be a range. Now I see a breakout, but look at this downward structure. Okay, it has to break out some significant levels, such as here, before I'm comfortable in entering a trade. Even this right here becomes a level for me because I'm not trading anything here. Okay, because I see a resistance level here, it could draw down from. A resistance level here, it could draw down from. What I'm looking for is a big move, all right? Especially in crypto. So what I do is I wait for a little more bullish confirmation, all right? That doesn't mean I'm going to be buying up here. That means I'm going to be looking for bullish confirmation here. So this luckily happened because now that shows me where I would look for an area for the price to close above for me to actually buy. Because see, I'm sitting on my hands through this entire thing. Because now all the people that thought that this thing is going up because it was breaking higher highs, they're all like buying more and more and more and more and more. Now this price is going down more, and they're like, oh, and they're crying. And now they're buying more and more because the price is going up again. Now, boom, look at that drop. Okay, now when this candle happened, look how many people probably exited. But if they didn't zoom out, they would have understood that this is a support level. Maybe it's not time to exit yet. Okay, so then it bounced off of there. What I'm looking for is this level, this general area here, how price action looks in that area. And see this huge bullish candles, but there's a big wick on this one. Okay, that I would hesitate. I would wait to see more bullish wicks without there. Bigger bullish, that's a bigger candle right there. And you wait for a retrace, something down to the EMA level, and that which is probably a confirmation of it breaking out this resistance level, and then boom. Okay, I actually took a risk there. I had no idea it would go up like that, but so there you go. And then what smart investors do is once they see moves like this, big bullish candles, they exit. This is why you see retracements. Retracements like this are institutional investors putting sell orders here. These sell orders are for a number of reasons, but a lot of them are Fibonacci levels. See, if you go like this to swing high, what you'll see is Fibonacci levels: 618, 218, 4.236. I think this move is a lot longer, but see, when it hits those levels, the wicks start happening. See, that's selling, selling. See, these wicks start happening, selling by institutional. That's where you got. That's how you have to understand how to play this, because institutional players, they take money off the table and they sell, and then they buy again when they see the retrace down to a specific point. For me, it's around the EMA. Okay, and then this, none of the, I wouldn't be buying anything here. I'd be buying around the retraces. Okay, now wait for another dip. Boom. So in this particular case, Ethereum has dropped. Where are we right now? May 20. So Ethereum dropped and it hit this low 3 times at 63% retracement. All right. So it was a good time to buy, but what you're looking for is bullish sentiment. So, okay, it looks like there's a range here and it looks like there's a pullback and a pop down here. Now, you could take this risky. For me, this is a risky trade because this is going from 2.4 down to test its high. All right. So I would put a little less. Why? Because I don't feel that this may or may not go up more. I may not feel that. The reason why is because I saw this extended bull run up. I know from market structure that after extended bull runs, there's usually a bear market. Okay, this is an extended bull run up. This lasted a whole year, more than a year. This bull run. Okay, so May 2020, March 2020 to May 2021, this bull run lasted. Actually, even longer. So that's why I knew this is going to be, and I've called it on my Twitter many times, that this is going to be going down a little bit before it comes back up. But one thing is that all the good news about Ethereum. I think another thing very interesting that is happening is in Ethereum's history, there are upgrades that occur. So ETH 2.0, ETH 1.0, and protocol upgrades that occur that make the Ethereum network more resilient. For example, what happened in December 2019, right after the big bear market run that we just saw, is a multi-glacier protocol upgrade deploys on the system. That's where that lot of buying occurred right after that bottom hit. And then there was a dump in the market. This is institutional manipulated right here. This move right here is manipulated because this should have been this right here. Okay, this move up. Why? Because right here, final testing begins for ETH 2.0. Boom. Boom. Look at that move up. Okay? And now what's happening? What is happening right now? Now, a bunch of other news happening right here. What was just recently announced? Ethereum upgrade delays difficulty bomb. So there's another upgrade coming. It was delayed till June 2022. So we could be seeing a bottom close to June 2022. And then the same type of market structure you saw here. The same type. This is when that upgrade was announced. Okay, Glacier. When that happened, market dumped. Institutional traders dumped because they knew their buy orders hitting now. Buyers are coming, so they dumped them. They liquidated them, and boom, they ran up the market. Okay, this is when that ETH 2.0 was announced, and boom. Okay, but that should have been this move was not necessarily because of ETH 2.0. That was because of the multi-glacier protocol upgrade that happened here. Okay, now when that happened, boom, now we're suffering the same thing. Now June comes around, that's going to be around here. Assuming that everything goes to plan, technically what we're going to see is a run up like this. Okay, we're going to see a bottom of some sort, and then a run up to fake traders out, another dump down, and then slow, steady come up, followed by larger exponential increases in price. Okay, but what I would do is I would wait for something like this to occur somewhere around the bottom. I would measure how far it has gone by now. Let's just say it's gone out 80%. That's reasonable. You know, you could take another 10% hit if it goes down further, and then you wait for it to range. Establish a range so that you can find a place to buy. Okay, my next buy order is going to be waiting for this place right here. Anyways, I hope you guys are still here and you found some information and enjoyed spending time with me. I would really appreciate a like button. As always, thank you very much for your support so far, and I hope that you guys are learning. I'd love to hear more types of analysis that you guys do and more things that you would wish that I would talk about. I am still constantly learning right now. I'm learning about on-chain analytics through Glassnode, so I hope to bring you that type of information in the very near future. Thank you very much for listening again. My name is Huzaifa, Heezy on the block, aka Who's, aka Trader on the Block, Trader on da Block with the D. Thank you very much and have yourself a great Sunday.